Hey everybody, welcome to Stock Trading Pro. Today's Stock Market Live, we are going to uncover, are there some buying opportunities while the stock market is getting hit today, and this week, and this month, and this year. Stock market crash has a lot of people doubting themselves. We're actually going to show some, some success stories from our community today. I want to give you some inspiration. It is Thursday, today's Friday, so we're actually going to do a deep dive into last night's coaching session. Every Friday we do this because I want to send you off into the weekend with some big stuff to think about and improve. I'll just give you a little bit of a, you can take a screenshot of this because I want you to be able to, right here. So you can see last night's call was an hour and 42 minutes. And we covered a bunch of stuff last night. So we have a lot of things we're going to talk about today, but mostly we're actually going to do some research today together. We're actually going to do some scanning. We're going to go over some ideas, look for some of the best stocks to buy now, heading into now that the last quarter has just finished yesterday. Will the selling in the stock market intensify? Will the big stock market crash of 2022 end? Well, and we're going to figure that out today. But two of the biggest things that I want to point out today is this has been an amazing, amazing week to learn how to be a trader. One of the biggest things that I get when we have new people coming into the community is asking about, is now a good time to learn the stock market? Is right now a good time to learn how to be a trader? Or should I wait for perfect conditions and then I'll start to trade, right? Well, let me ask you a question. How much did you learn last year in 2021 in the stock market compared to what's going on right now? And the reason I'm saying that is a lot of people had paper profits last year. A lot of people had unrealized gains. The stock market just kept going up every single day. At least it felt that way, right? And now the market turned this year and it's going down. So if you're still holding big losing positions when the stock market crash of 2022 started, what did you actually learn from last year? Not much. Actually, you probably did learn quantitative easing is something that you really want to see come back. Well, right now we actually have the opposite of that that's about to start in July. So that's why we're actually going to do some research today and take a look. Can we find some opportunities, some pockets of opportunities of strength? And we're also going to talk about short selling stocks. If you don't understand that, we're going to get into that in a little bit of detail today as well. So we have a bunch of stuff we're going to end the week with today. I am super pumped up. We had a great coaching call last night, and I can't wait to share with you. So stick around. I'll be back in just 1 second. Okay, so obviously, thank you so much for joining me today. I really, really appreciate it. What a month, right? We ended the month on the downside again. We're going to do a little bit of sector rotation right now. We're going to take a look at some groups of stocks that are showing relative strength. We're going to take a look at some stocks that have relative weakness. We're going to make a determine on if there are some top stocks picked right now that you might want to buy. Is there a list of the best stocks to buy now? Should you be in cash? But first, I want to talk about something that is critically important to your success as a trader. And I want to share a couple of things. I want to take you behind the scenes into our community and show you some of the lessons that sometimes you just can't learn as a trader being home by yourself. So I just want to pull these up on the screen because they're really important, quite honestly. And the first one here is actually from Miles in our community, where Miles yesterday is talking about a few months ago, I would have lost $1,000 today, ending the day with a small loss. And you can see some other members of the community, including Anthony here, having that same experience. So the big thing I want to get across here, and I can't express this strongly enough, with the market going down and everybody being excited, stock market open, let's make some money and that kind of stuff. The very first thing, I feel like I'm talking about Fight Club right now. The first thing about Fight Club, the first thing about trading is you need to understand first how to develop an edge, and then second, how to not lose money while you're learning if your edge works. And then number two, can you actually follow it? So I just want to pull this up again because this is something, honestly, that is critical to your long-term success, which is understanding the kind of market conditions that you're in and then trading those market conditions appropriately. Now, if you don't believe that in a big way, think about going back to last year and how you would have managed those profitable trades that you had coming into 2022 and we started to move down. You need to understand how to make more when the market's fantastic and understand how to minimize your risk. So I just want to pull this up one more time because it's that important, actually. And that you can see here on the top, a few months ago, I would have lost $1,000 today, ending the day with a small loss. So what that essentially means is a monster part of our community is understanding the downside, understanding that every day isn't, let's go get them, let's go get them. Sure, there's pockets of opportunity, but I want to explain this in a way, and I want to teach it in a way, quite frankly, so that you can benefit from my years of experience and obviously what Miles is going through right now, that sometimes, and this is going to sound weird, sometimes a small losing day or week or month, whatever it happens to be, if you might be a swing trader, sometimes that is actually still a great day because you recognize the kind of market that you were in and you kept your exposure lower because you weren't getting follow through, because it wasn't obvious, because maybe stocks are going down and you were trying to buy it. You took trades that you thought were good ideas, but you didn't blow up your account. You didn't max out your stop loss for the day or whatever it happened to have been. So the part that you want to write down here, which was just fantastic, is sometimes a small losing day actually is good trading if it was a tough day. That's the first one that I wanted to go over with you. I'm actually going to bring another one up, and this one has a lot more to do with mindset. And this is from Dave Kinlock. He's been in our community now for a couple of months. I'm very grateful for him being in there. Nice feeling making back all of my morning losses when I was getting stopped out. So there's two things to that. Number one is our job is to trade every single time we get one of our opportunities, and we can't let the next trade affect what happened on the last trade. That's very, very important because our job as traders, we have an edge, and that means it works over time if it's back tested and we have a track record, right? So when I say over time, I mean over a large sample size of trades. That also implies that sometimes that there's going to be trades that are good trades that don't work out. So the part of this that to me is really, really important is number one, making it back when I was getting stopped out. So there's a couple of things to unpack in here. And I really want you to take this home, especially because of the way the market's trading right now, where it's probably messing with your head. You will know how much you believe in your trading strategy when you continue to trade it without changing it when you're losing money. Because if your track record indicates that when the market is obvious and when you're getting follow through and the conditions give you some profitable ideas where you put the trade on and it moves, right? You have a track record and it works, right? Works in parentheses, right? You will know how much you believe in your strategy when you continue to take the trades that are good trades, even if the previous bunch of trades or maybe the last day or trade or morning, whatever it happens to be, even if they lose money. That's because you believe in the edge, not necessarily your ability to predict. One of the biggest mistakes, and I'm just going to say that straight up, is people who come into our boot camp believe that teach me how to predict the market. We do not need to know how to predict the market. We need to say, is it obvious? Are buyers or sellers definitely in charge right now, which we call order flow? It's stacking the order flow. And then we do tape reading and optimal entry, right? For those of you that think that there's anybody who's on YouTube or CNBC or whatever it happens to be, nobody can predict the future. Let's just get that out in the universe right now. Our job is to believe that our edge works because we've tested it, we have a track record, and we have the ability to follow it. But here's the second part of this, which I think is massively, massively critical in today's market condition. And I just want to pull this back up again one more time because I'm really proud of David. Is making it back when I was getting stopped out. So the hidden part of that I really hope that you could take home with you, and we're going to go over to the coaching quote, because I want to get into that quickly for you today, is you need to have the mental strength that when you are getting knocked down, you're getting beat up, and you feel like that this is what is wrong with me? Why can't I get it? And those are the moments where you are going to determine how much you really want success. There's no other way to put it. Last year was amazing. It was fantastic. Let's just say what it is. It was easier last year. This year is a little bit tougher, and you are learning how to trade right now. David is having this success and Miles having this success in the current market conditions. Think about that right now. They are forging something inside of themselves, And David showed how tough he was yesterday by sticking with it, not complaining, continuing to place good trades, and then a couple of trades made his entire morning back when and again, we can talk about that in a second. The morning, especially for day traders specifically, was pretty choppy. This week has been challenging. The first hour is typically one of those you put trades on and they follow through. We really haven't been having that this week. So David, Anthony, Aaron, Braden in our community, I'm so proud of everybody in our community. And I want to give that to everybody here on YouTube and social media to let you know that if you're having a tough day, a tough week, a tough month, maybe even a tough year, this is when you need to pay attention to the results of what you're doing. Literally start writing stuff down, make a big list of what does not work, stop doing that, and then start doing a lot more of what is working. And I know that sounds insanely obvious, right? But you'd be surprised how many people don't pay attention to results and then say, what am I doing wrong? And what am I doing that's not getting me the results I want? And what can I do more of that is working? Now, one of the biggest things that we've been speaking about quite a bit, both here on YouTube as well as in our coaching, is managing profit expectations based on the conditions of the market. So in other words, is the market super obvious bullish, super obvious bearish, or is it chopping around and giving you gray hair? Lately, we've been having bearish to neutral. The long side of things, well, we're going to take a look at the best stocks to buy now in just a second because we're going to do a little sector rotation. The long side buying opportunity has been a little bit more kind of like it's getting there, but it's stop and go traffic. Stuff on the short side, if you understand short selling, that's been following through in a little bit better way. So again, we need to understand the odds of follow through and what that means for our reward potential. So again, we all know risk reward in trading when we look for the top stock picks, right? We want to buy it, risk a little, and make a certain amount of reward. The opportunity for buying opportunities for the buy side of things has been a little bit tougher with all that downward pressure with inflation and recession and the Fed and all of that stuff that's going on. So the buying opportunities have been more cash flow, where as soon as it moves in our favor, we have what we call the momentum profit maximizer, where we're getting out when it slows down and then looking for the next trade, as opposed to on the bearish side of things, which is the obvious dominant order flow right now, we are using a trend profit maximizer where we're giving the stock a little bit more room to breathe, push down, a pause, and then looking for the next move down, simply because it's obvious that it's going down. So you need to start asking yourself, is this obvious right now? And what is my expectation that's realistic based on what the market's doing right now? And we could use Tesla as an example of this, as to really bring this point home. And we'll pull up the chart. There was a lot of money being made in Tesla last year, but we've mapped this out, and you can pretty much see this right now, where Tesla is just still kind of stuck in this box right now. And if you're trying to force trades in Tesla, you got to recognize we're not in this anymore. We're kind of stuck right there. So the bigger picture of the market has kind of been the same way. Now, is this complicated? Not really. You just need to pay attention. You need to do, again, like members of our community, you write everything out and you say, if this is what the market conditions are, then this is the kind of profit targets that I'm going to be out there hunting for. And you know that before you even put the trade on. So there's never any guessing for what kind of profits you should be going for. Now, that's critically important in this market condition because that's also going to affect your share size. It's going to affect how much you're willing to risk on the idea based on how much profit you could make on it. Now, if all this is new to you, if all this is, I'm talking like a different language, you just have to ask yourself this. Before I buy this stock, how obvious is it? And how long has it been obvious? We have a whole system of doing all this. It's called order flow stacking and tape reading and the optimal entry. I want you to have something that's actual. Just look at the chart. Say, how long has it been obvious? Before you hit that buy button, come back with an answer, because that's going to tell you how much real money was spent to create those patterns that we're looking at on the charts. Again, how obvious is it? Ready, go. Not obvious. It's not doing anything, right? So it's kind of stuck in that box. So if you're trading today's order flow, or maybe just 2 days worth of order flow, you're leaning on the smallest part of order flow stacking that you can go for. So if it's the smallest window and it's not obvious in the bigger picture, what kind of risk should you be taking? What kind of profit targets should you be taking? So this is where I just want to go back to this one more time because it's critical. A few months ago, I would have lost $1,000, ended today with just a small loss. So what that means is Miles now, and I hope that you start learning how to do this, is recognizing the conditions of when there's more and when there's less, and keeping risk manageable until and when more is available on the table. So I want you to think about that stuff. We're going to head on over now into sector rotation. We're going to go through a couple of different lists of stocks. Some of them are on the bullish side of things. Some are on the bearish side of things. And then we're actually going to get into what we had on the coaching call last night. Okay. Oh, actually, before I forget, I just want to remind everybody, if you haven't signed up yet, our options trading bootcamp starts on July 5th, the day after the holiday. And this is actually going to be a very, very special one because basically enroll and you pay half price. You only pay the full amount after you go through the entire 30 days. And if you're not 100% satisfied, don't make the second payment. You won't pay in full. So it's half price to actually get started. Go through the entire 30-day boot camp, including the coaching, the trade alerts, the implementation calls, obviously the training lessons. Let it pay for itself. And unless you're 100% satisfied, just let our team know if you weren't and you don't make the second payment. Okay. You can find out more about that in the link in the descriptions. I'd love to see you in there. Stocks and options, they're kind of like peanut butter and jelly, right? Okay. So we're going to head on now. We're going to look at a little bit of sector rotation, which is what we do all the time. And obviously you can see here now, let's actually go through the entire week because this is what the market looked like coming into Monday. A lot of buying last Friday, and obviously just a tremendous week last week heading into this week, right? Then we work our way down over here, and you can see, again, following through. But now we see cracks in the armor. Look at this, and look at this. Look at how different that was from here to here. So you can start to see that there's a little bit different order flow coming in, and you start to say, wait a minute. Again, these are the parts. Remember how we keep talking about order flow? This is the stuff that you need to do every single day. And I don't care if you're investing, quite honestly, you still need to know what's going on in the market. You still need to have a sense of, is order flow still obvious? Or how do I know when it's changing? And we call it, there's a disturbance in the force that the order flow is starting to not look the same way. So as long as it's still obvious, you get in there and you hang on, you make more in your winning trades. As soon as it starts to change, that's when you start to move up your trailing stop losses to book those profits in case it turns around, which it did. So again, this is the research I provide for everybody every single night, okay? So here we go. It started to crack a little bit. And you can see what heading into Tuesday led to on Wednesday. We still had some pockets of opportunity. We've been talking about healthcare, which we've been talking about for a while, and consumer staples, otherwise known as consumer defensive. But you can see this led to a pretty neutral day heading on into Thursday, and healthcare and consumer defensive still near the top of the list. And now heading into today, you can see yesterday got pretty ugly. What we're going to do is we're going to focus over here on energy and industrials, and then we're going to look at the other side of the market on on technology. Okay, so we're going to actually start out with energy. Now, the big picture in energy right now is energy has been bullish heading into about 3 weeks ago and then got absolutely crushed. So if you watch the video that we did here on YouTube on Wednesday, we said we were looking for bearish opportunities in the energy sector. So right now what we have with energy is we have a 3 or 4 week bearish order flow. So you can see that on the charts. We have 3 weeks of selling, but this week we've caught a little bit of a bid. So we're kind of a little bit back and forth. So it's a little bit deceiving because this reading right here is based on the last 5 days of trading. So if we hop on over, and we're actually going to put the 50-period moving average in here because it's one of the most common ways of determining short-term strength or weakness. So we're going to go over to energy stocks, and we're going to start out sorting it by how it traded yesterday. And we're going to start to look for some opportunities. So you can see that the 50-period moving average came in as resistance. So if you're a trading traditionalist or a stock market traditionalist, you understand Dow theory. Dow theory essentially is what most technical analysis focuses on, which is there's always three trends in place at one time. You have the longer term trend, which is the longer term bull or bear market. Then just above that, you have what's known as the intermediate term trend, which is what most swing traders lean on. And most people use the 50 period moving average for that. I've seen some people use the 100 period moving average, but I think most people use the 50. So you have the 200, which is the long term, the 50 period moving average, which is intermediate. And then you have the minor fluctuations, what they call in the market, which most people use the 20 period moving average for that. So the 50 period moving average is what we're going to focus on right now for potential swing trade opportunities in energy, probably on the short side, despite the fact that it's a little bit stronger. We're also going to take a look at technology on the other side of the market. But more importantly, we've been talking about healthcare stocks for probably the better part of 2 weeks. So that's another area that we're going to work our way over into here as well. So you can see here on Oxy, and again, just starting out, I'm going to go rapid fire here so you can get an idea of both of them. So obviously energy came in, it's got this selling. So you remember we talked about a push and a pause, a push and a pause, and we actually headed down again. So now we're actually up a little bit this morning. So what's kind of cool about this is, remember how we're talking about doing your game planning, talking about doing your research. You need to have multiple angles that you hit the order flow from to give you that conviction for follow through. So we have a longer term move to the downside, but over the last 5 days, we've had bullish order flow. So think about that compared to what we said at the beginning of today's call. You have a longer term move to the downside, which is basically about a 3-week move to the downside. And now the last 5 days were bullish. So if order flow today in energy stocks matches the last 5 days, but it's against the bigger picture, which is the last 3 weeks in this case, that means that if we're buying energy stocks today, our expectation for follow through on that opportunity is a little bit lower. So we'd start out with smaller share size. So remember we talked about there with Miles before and Dave, they are now managing the downside in this tough market based on recognizing order flow. They're stacking order flow and determining what kind of risk should I take right now. So the last 5 days, energy has been one of the second group on our list. So we're going to go through the list now, and you could determine which of these ideas might make the most sense for you right now. So Oxy obviously traded reversal yesterday. If you're a regular viewer of the channel, you know that Oxy traded lower and reversed. So we call that a bullish U-turn. And if you don't know those languages, do me a favor, if we're providing some value, make sure you hit that subscribe button. I'd really appreciate it. So Oxy actually reversed into a bullish U-turn. So we'd be looking for a short-term trade for Oxy to get back up here to this 62 level. So maybe about $2. Again, very short-term because we're trading against this. Okay. Let's actually head on over to some of the more popular ones. So SLB is a little bit different. SLB, although it's up a little bit now, it's broken all support levels, and the next major support is all the way down here at 28. So this still has $7 to the downside. DVN, very similar picture, up a little bit this morning, but you can see the push down and the pause, the push down and the pause. So I just want to be super clear about what we're talking about right now. Short term, based on the order flow, right here, short term over the last 5 days, it's up just over 2%. So that means that short term order flow right now means I'm looking for shorter term trades to the long side. But if I decide for a bigger profit target and maybe more share size and hold a little bit longer in this group of stocks, I'm looking for them to actually trade lower, assuming the price of oil continues to go down and doesn't rocket up again. So again, if this happens, then I plan to do this. Okay. So we're going to work our way over now into, there's been a couple of industrial stocks, actually, you can see over here on the list here that have actually started to move higher. So we're going to work our way over into industrial stocks, and we're going to work our way into right here. Okay. So there's some popular stocks here. The airline stocks have been actually rallying a little bit, but they've taken a hit this week as well. So industrials, which has been perking up a little bit, there's some very, very strong, and there's some that are very, very weak. So again, this is why you got to dive into those groups, because just because it matches the criteria as a sector, then we got to go one step further and say, okay, which of those stocks in this group that is strong for the last 5 days is creating that relative strength? So again, all we're saying is it obvious? How long has it been obvious? And then which stocks in that group should I be watching based on that last 5 days worth of buying pressure. So then we go a little bit deeper, and now we're looking for the best stocks to buy now in the industrial stocks. And Fedex actually had earnings investor conference yesterday. So you can see Caterpillar is a big breakdown. So this is a stock that's showing relative weakness to the group. Boeing actually had a really nice breakout over here. We talked about this last week. We were looking for it to get above 140 and stay. Did not get there, which, by the way, that's another big thing to discuss. We said Boeing breakout had to close and stay above 140. It didn't, came right back in, so we left it alone. Okay. But we do have Fedex. So Fedex obviously showing some nice relative strength here. It's pulled back and it's down a little bit this morning, but again, it's still here. So this is really why you need to dive a little bit deeper. We go into Raytheon, which actually had a pretty big day yesterday. Once you understand the fact that running a scan is not always a trade, you start to lift your trading up a little bit higher because, again, we have a lot of people that look at this kind of stuff, right? They're on FinViz. They're looking at the homepage of FinViz and they're seeing all of these things, right? And they'll click on a scan and it'll be like overbought or oversold or top losers and that kind of stuff, right? This is a really advanced tip. Just because a stock meets scanning criteria does not mean it's a good trading idea at that moment. So let's actually talk about that. Curlin, it looks like it says Curlin's typing in NVIDIA and AMD. So we're actually going to take a look at those right now because both of them meet the criteria for bearish order flow and short sale ideas, but they're a little beyond the optimal entry. So the reward potential's a little bit lower. So I'm going to actually explain what that means right now for you. So on the short side of the market, the bearish side of the market, you can see AMD and NVIDIA have both already gone now 4 days to the downside. And we'll take a look at that again. 5 days to the downside. And actually in AMD is actually even worse. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. 10 out of the last 11 days, we have red candles. So that's clearly, right? We can clearly look at AMD and say, it's obvious, it's selling, right? But is it a good opportunity right now? We call this a bearish echo, where it's obvious as a short sale, but if the stock normally moves this much and it's already moved that much, it's still an obvious idea, but not the best swing trade right now. So this is where we get a push, and it's done most of the push. We're waiting for the next pause before the next swing trade. So what does that mean? That means for me right now, for AMD and NVIDIA, while they're still obvious, I'm only going to look for a short-term trade because most of what they normally do has already been used up. Now, we don't want to put a limit on what a stock can do. That's very important. So you need to make the distinction between initial profit target versus what we call profit maximizer. I just want to use the language correctly. Initial profit target and profit maximizer. Once you hit your initial profit target, so again, for argument's sake, let's say AMD normally goes $15. Let's say it's already gone 12.5. So that means that there's $2.50 worth of what it normally does in the next trade. So that essentially means that when it gets down to that final number of what it normally does, I'm not just going to get out. I want to see if there's more room to go. So this is where we switch from target to maximizing that profit. We're going to give it a little bit of room to breathe to see how much more room there is to go. Same thing on the upside, which we could talk about now. The other side of the market, which has been healthcare stocks, which have been very strong. So some of the best stocks to buy now have been for the last 2 weeks in healthcare. We called that out last week. Okay. So if we hop on over to this again, and we take a look here, healthcare is kind of stuck in the middle, but some of these healthcare stocks have actually been relatively strong. And you can see the kind of move that we had here. Now, obviously, a lot of people on this call understand basic technical analysis, that kind of stuff. So we have a push and a pause, right? So based on normal movement, like we just said, a push and a pause. During the pause is when we manage risk and put on new trades. During the push is when we make money. So the XLV, the healthcare sector, and probably take a look at this on the hourly chart, get a little bit better view of what it's been like over the last week or so. You can see here, this is what it's been doing. So again, for those of you that are like, there's no opportunity, you just gotta do a little bit more game planning to determine which are the best stocks to buy now. And sometimes you got to go a little bit deeper than just below the surface. And we've been all over the healthcare stocks because they've been offering some really good short-term opportunity. And you can even see Merck had a much better move to the upside. So that's just one example. So we had Merck, right? So this is a pullback. We're looking for it to take off. We also have had Lilly. We've also had CNC, actually, which is had a really good week and a half, maybe a little bit of resistance up here. Johnson & Johnson, obviously a big move back and a pullback and into a bullish U-turn. So I just want to be clear. It has not been super easy. I just want to say this. This week, this month, this year, it's been a little bit, you drink a little bit extra water to keep your sanity. It's been a little challenging. But, and I want to say this clearly, prefacing with that this year has been challenging. It's critical that if the market does not match the way you want it to look, it's critical that you don't trade. And I know that's professional wisdom right there, because just because the market opens, just because you have available capital does not mean that you absolutely need to do something. Sometimes it's smarter to stay in cash and wait for what you believe are the perfect opportunities. Again, we're talking about trading, not really. We could be talking about value investing because I think sometime in the next 3 to 6 months, we're going to have some amazing trades. I don't think it's done yet. I think we got one more big push to the downside. If, however, you're willing to do that little bit of extra work, like we're talking about now, digging into the market, digging into the sectors, digging into the groups, and then going on that treasure hunt to find some of those short-term ideas, there is some money to be made now. But again, going back to what we talked about before, where Dave and myself, again, I had the same exact thing. I'm trading actively every day with the community. There's been mornings the last couple of weeks where the first hour of the day I'm day trading and it's every trade you put on, you're like, what the heck is going on? That was a good idea. You dig a little bit of a hole on good ideas that don't follow through, and you have the perseverance. You continue to look for good ideas, and then you end the day positive because you stuck with it. You believed in your strategy. But the big part of that is keeping your risk down while you're still trying to get a head start on your trade, while you're still looking for good ideas. I'm not going to say the market's easy right now, because anybody who says that right now is straight up lying to you. I will say, though, there is opportunity if you're just willing to take that extra half an hour and dig a little bit deeper and say, which of these ideas match the way that I want to be trading right now? And I think that chart of Tesla is probably one of the best examples. It's kind of stuck in a trading range right now, hasn't moved for 2 months, but a lot of people are still visualizing in their head that it's last year. It's not last year anymore. Let Tesla become a little more obvious, or whatever stock you happen to be trading. And if it is, get in there with confidence. Just determine how obvious is it, because that's going to then dictate your profit potential. I want to make a move on over now into our coaching call from last night, because there was a bunch of stuff, and we do this every single Friday. Thursday, we have one of our implementation sessions, and come into Friday, I want to give you some stuff to think about for the coming weekend. Okay. So we're going to head on over here and here. Okay. So you can actually see here this call from yesterday was an hour and 42 minutes. So we really got into it in a lot of detail, and you can see all the stuff that is included here in the boot camp. But we want to first talk over here about community success and overcoming adversity. And I actually just want to start there for a second, because it's very, very important. I have a lot of respect for everybody, especially right now. If you're on this call with me at 7:30 in the morning, you're really showing how badly you want it. Some people are on the West Coast. It's probably 4:30 in the morning, different parts of the world. You want this. You want this bad. You woke up early. You're trying to learn more. You want to get some insights. You want to have that semi-retired life where you come and go as you please. In that journey, I'm just telling you straight up, there's going to be some adversity. You're going to get knocked around. You're going to doubt yourself. You're going to say, why am I doing this? This is so hard. Push through that. While you're pushing through that, maintain your confidence, maintain your belief in yourself. But if you're struggling, make sure that your risk is a little bit lower while you're trying to get out to the other side, because you have to make a distinction between, is it a tough market or am I not trading well? Sometimes it's both. Sometimes it's a tough market, and you just have to recognize that. But trust me when I tell you this. When you accept adversity as feedback and as lessons, that means that every single thing that happens becomes a way to improve the very next decision you're going to make. So that's a big part of what we talked about on last night's call. Okay. We also talked about last night on the game, and actually what you can do is screenshot this. I'm going to make it a little bit smaller so you can screenshot the whole thing. Let me just pull this back here. And right there, that's actually the whole thing if you want to screenshot it right there. So you can get a whole breakdown on everything in there. So this is the big thing I want to talk about. One of the lessons from yesterday, which is here. I'm going to zoom this in and right here. Every single day, we have a game plan meeting. Okay. Every single day. And every day at 8:30, and I actually have to get ready to go to that in a second, is members of our community are encouraged to post ideas. I give my entire game plan the night before, all the stock picks, to research everything. I do a video, and they have overnight to watch all the ideas that I'm giving them for the next day. Then 8:30 in the morning, members come to the community, and it's my job to review their game plan ideas, their stock picks. Sometimes they're amazing. Sometimes I'm like, oh my gosh, this is absolutely fantastic. Let's go with this trade idea. It's awesome. Yesterday, we had a trade by somebody posted there. Now, remember, I just talked about all of the ideas in the healthcare sector that have shown relative strength, nice moves to the upside, and well-bid green candles for the last 2 weeks, right? So there's some really strong stocks in the healthcare group. But what we talked about yesterday, it was actually the last pick that we talked about in the game plan, was one particular pick that somebody made in the healthcare group. That was a bad idea. It was still going down. It was not showing strength like everything else. And the member of the community said it's due for a reversal. Now, this lesson I'm about to give you is going to make or save you tens of thousands of dollars. And I say that clearly on video, because in our mind, we think that all of the ideas that we take are fantastic, and we get frustrated that, why am I not making money? I'm taking all these good ideas. This is why we game plan. This is the point of community. This is the point of why we're on these calls right now, right? This particular idea didn't make any sense. There were other ideas in that group that were already strong, dozens and dozens of other stocks that were already strong that many could consider the best stocks to buy now, and those are the opportunities. This particular game plan, this person said it's due for a turnaround, despite the fact that it's still going down, and despite the fact that there's other stocks in that group exhibiting much better strength. That's why you need to script out your game plan, and if possible, share it with somebody else who you respect as a trader. It could be me, it could be anybody, and say, is this a good idea? And then you have a dialogue. Again, going back to the very first thing we talked about today, when you learn to minimize the mistakes, I'm going to say something that you might not believe, but it's a big part of trading. And you might be like, what is he talking about? Our goal, our number one goal as active traders, is to always lose money on great ideas. Let that sink in for a second. We defined our edge works over time, most of the time, which also implies there's going to be some losing trades. So when we have losing trades, we want our losing trades to be on a great idea, because even if it didn't follow through, the probability, which means most of the time, not all of the time, the probability means it will follow through. So write that down. It's critically, critically important. So we stopped this person in a review during the trade to say it wasn't the best idea, and here's why. And then we shifted into some other ideas. So I'm going to say that one more time. You want to always lose money on your best ideas. When you start sprinkling in all those garbage ideas that are not good trades, those are the ones that are getting you frustrated, not your good trades. I'm telling you, this is from a lot of experience of my own and when I owned my firm in New York City. So we want to go through just a couple of more of these. We want to talk about this here, the discipline, the stress, and the process of holding winning trades. Believe it or not, getting out of losing trades is actually pretty easy. It's holding winning trades because you have to have faith that you're going to make more on a bigger trade. So if you are now mentally stressed out about winning trades and making money on those winning trades, very, very important to know that you're not the only one, but you have to trust the process. And that's where money comes from, trusting the process. So you got a chance to take that snapshot. There's a whole bunch of different things in there. I have to get ready for our other call. I just want to say thank you so much. If you're having a tough week, I got your back. Keep coming back here. Subscribe, get new updates. We've got new education coming out. Stick through it. Manage the downside if it's challenging you right now, and you'll find a couple of pockets of opportunity to make money. Don't dig a hole if it's challenging. Keep that risk exposure a little bit smaller. Manage the downside, and a couple of good trades follow through, and those are the ones that you get paid on. So thanks so much for being here with me. Have an awesome day. Have an awesome 3-day weekend. For those of you that are not here in the country, we got 3-day weekend coming up right now if you happen to be overseas. and do some good game planning today. There's going to be some more volatility, especially with the new quarter and the new month starting today. If you haven't done so already, make sure you sign up for that boot camp, the options trading boot camp. And if we provided some value for you today, do me a favor, smash that like button and hit subscribe so you get updates. Have an awesome day, everybody. I really appreciate you being here with me. Thank you so much.